Noble Group was once one of Asia's largest commodity traders. They were worth billions and were operating in lucrative industries such as energy coal, metallurgical coke and coal, and oil products. At one point, Noble Group was valued as much as $12 billion in the public stock exchange, which easily places it as one of Singapore's largest companies by market cap. Yet Noble Group is no longer the giant it once was. It is now known as one of Singapore's largest bankruptcy cases in history. What fueled this failure was none other than debt. The company was saddled with massive debts of billions, which brought the company to a halt. So how did this happen? How did one of Singapore's largest companies be so saddled with debt? Was the management wrong about taking on too much debt to fuel growth? Or is there another reason? Well, let's first begin with the history of Noble Group. Noble Group was founded by Richard Ellman, an Englishman in Hong Kong. Ellman began his career in a scrapyard in England at the age of 15 and had become one of the few non-Chinese individuals recognized by Forbes magazine as among the wealthiest in the region. The Noble Group was established in 1987 with $100,000 of Ellman savings. Ellman later said that they started the business with 2 telephones. Just a decade after its inception, in 1997, the company would be listed in the Singaporean Stock Exchange. Noble debuted with a share price of 1.35 Singaporean dollars. Although the company was Hong Kong-based, it chose Singapore due to a larger fan base of investors. Just a few years after the company was listed in Singapore, the company would immediately become one of Singapore's and Asia's largest companies. In 2003, the company's annual sales would hit $4.4 billion. Its trading operations range from cocoa, steel, iron ore, and soybeans. What led to its success was its strategy to target a niche in the global supply chain by offering comprehensive services beyond simple trading. You see, Noble operated by embedding itself deeply into the supply chain of the commodities it trades. Noble manages every step of the supply chain, from sourcing raw materials to delivering finished products. This includes transportation, processing, and logistics, ensuring control and value addition at each stage. An example of how this happens is Noble's handling of iron ore from India. The ore is transported from Bihar to a port near Bhubaneswar, shipped to Qingdao, China, processed into steel at a state-owned mill, and then sent to manufacturers in Japan, South Korea, and Australia. This process demonstrates Noble's capability to enhance the value of commodities significantly through meticulous supply chain management. By 2006, a report would submerge. This report discussed the scandal that unfolded in Noble Group's business. They said that there were 2 of Noble's aluminum traders who falsified trades to cover unprofitable deals. The impact on Noble, while small, was still covered throughout the news. Noble Group was already a billion-dollar company, and such practices harmed the company's reputation. The scandal led to a downfall in the company's share price from a high of 1.41 Singaporean dollars to a low of $1.15. The company's net income had also fallen to $231 million in 2005, an 18% decrease from the previous year due to the scandal. Over the next few years, Noble Group would swiftly change, and despite this scandal, the company would emerge with ever larger growth and even new partners. In 2009, it was reported that China Investment Corporation, CIC, would spend over $850 million to buy a stake in Noble Group. This would leave CIC with a 14.9% stake in the company, a company that had reported its full year revenues for 2008 to be over $36 billion. This acquisition segmented the crucial role Noble Group plays. You see, CIC was no mere small company. It is China's sovereign wealth fund, which today manages over $1 trillion in assets. At this stage, the company was no longer a full-scale commodities trader. It had enough capacity and capabilities to become more, and it did. It embarked on a big transformation from where it once was an integral part of the material supply chain, trading various goods into acquiring and turning around unperforming assets. This transformation began when they acquired Andre Andre & C's grain trading business in Asia. Andre, a Switzerland-based company and the world's fifth-largest grain trading house before its collapse in 2000 and 2001. An analyst with JP Morgan in Singapore estimated that Noble has spent up to $1.5 billion since 2005 on acquiring assets. Noble, by 2009, would control several mines, processing facilities, and ports in countries including Australia, Brazil, China, and the Ivory Coast. The latest significant acquisition was Australia's Gloucester Coal for 460 million Australian dollars. Unfortunately, Noble Group would already be saddled with debt at this point. In 2010, the company was negotiating a $1.5 billion refinancing of an existing loan with banks. $1.5 billion is no small amount, and altogether, the company had billions in revenues per year, but it still had to balance everything out to ensure it does not take on too much debt. 2 years later, by 2012, Noble Group would release its annual report, which showed that they had over $6.1 billion in outstanding debt, a hefty amount, especially considering that their net profit was only $431 million in 2011. The talks of corporate bankruptcy of Noble Group would not emerge until 2015. In March of that year, a researcher would emerge to question Noble Group's accounting practices. The iceberg researcher raised red flags regarding the company's corporate governance. They claimed that Noble, quote, engineered a lower level of debt by including inaccessible cash in its calculations, stating that Noble's gross and net debts were significantly higher than reported. By June, Noble would engage in a heated exchange to address concerns about its accounting practices and aims to preserve its investment-grade credit rating. Then in December, the company's credit rating was downgraded to junk status by Moody's Investors Service. Noble has faced allegations of accounting irregularities and a decline in commodity prices, severely impacting profits. Moody's cited concerns over Noble's liquidity, low profitability, and negative cash flow from operations. And the downgrade is significant, as $11.1 billion of Noble's $15.5 billion banking facilities are uncommitted, meaning lenders are not obligated to provide financing if Noble loses its investment-grade status. So to fix the situation, Noble announced the sale of its remaining stake in Noble Agri to Chinese state-backed grain trader COFCO for $750 million. But despite Noble's attempts to mitigate the impact of the downgrade, operating costs would rise. Investment-grade status typically ensures lower borrowing costs, crucial for commodity traders who rely heavily on debt for global operations. They tried to restructure its debt but were complicated by legal battles with various stakeholders. In 2017, Iceberg Research even sued Noble for defamation after the company accused the short seller of spreading false information. A year later, Noble announced a loss of over $1.7 billion, and by 2018 would warn that it would incur annual losses of as much as $5 billion. Despite Noble's attempts to resolve its financial issues, its debt continued to grow, leading to a bankruptcy filing in March of 2018. But by August, shareholders approved a debt-to-equity restructuring deal, reducing its senior debt from $3.4 billion to $1.7 billion. Under the plan, creditors will take a 70% stake in the business, existing shareholders' equity will drop to 20%, and management will receive 10% as an incentive. Unfortunately, this was just the start. They would implement additional restructuring programs over the coming years. In 2021, Straits Times said that Noble Group was winding up in Bermuda, sold billions in assets, took substantial write-downs, and cut hundreds of jobs while defending its accounting practices. It was also delisted from the Singapore Exchange in 2018. Then in 2022, after numerous investigations by Singaporean authorities, they would receive a $12.6 million fine for misleading information in its financial statements. further justifying that it was not only debt, but also a fraud. Iceberg Research, however, said that the fine was too small. Moreover, the fine was imposed on Noble Resources International Pte. Limited, or NRI, whose post-restructuring shareholders and creditors were not involved in the fraud. The report further said that the main perpetrators, including founder Richard Ellman, faced no prosecution. Iceberg also said that the efforts to engage MAS and SGX were unproductive. Despite evidence of fraud, Noble was allowed to raise more capital in 2016, misleading retail investors while managers continued to receive substantial salaries. Then, after the firm published their reports on Noble, Iceberg Research faced retaliation, including surveillance, threats, and attempts to bankrupt the researcher. Regulatory authorities showed little interest in addressing the harassment. What is even more surprising to this story is that in 2023, Ellman, who is now a nobody, and Noble Group, which is insolvent, had sued the successor company over a debt restructuring he claims was unfair to minority shareholders, including himself. Ellman, whose stake once exceeded $1 billion, filed the lawsuit in Hong Kong. The story of Noble Group is then indeed not just a corporate debt-fueled growth story, but also, as per Iceberg Research, of lies. But anyway, do let us know what you think. Thanks for watching.